Good morning and welcome to Markets Today. I'm your host Mbithe Muema. Co-hosting this show with me is Mr. George Bodo. George, what's going on in the markets?
We're waking up to a very dull, cold morning, but a couple of news that is likely to drive the market in the next couple of days before the weekends. Top of the news is obviously KCB finally received the first regulatory approval from the CMA to issue an offer document to NBK.
That's some
I think that's
news.
Potentially a very big thing.
Okay.
And subsequently, I think they formed the transaction team to lead the takeover. All
right, interesting. I think there's a lot of news that we want to discuss. But before we get into that, let's give you a highlight of what happened yesterday in the terms of trading on the NSE. Turnover was up 33% compared to Friday. We closed at about 273 million. And for the first time in a very long while, about 2 to 3 weeks, we saw the foreign investors become net buyers on the stock exchange. It was a very minuscule amount, about 5 million shillings, but still just showing us that maybe the sentiment is turning. In terms of top movers, we had Safaricom, which was the top mover of the day, followed by Cooperative Bank, which hardly trades. It traded about 1.6 million shares. Of note, there was a foreign seller who was selling to the local investors. So we're seeing the local investors beginning to probably look at the banks on valuations and the potential triggers of a rate cap repeal or at least an adjustment in that regard. And finally, in terms of corporate actions, today is the record day for the Jubilee dividend payment, which is 8 shillings. So expect a downward trend on the pricing, but nothing to worry about. It's just a correction with regards to that payment. Now, George, let's go back into the news. You had started us off on KCB and NBK, and they've gotten the CMA approvals. Are there any other regulators that we need to look out for approvals as well?
Yeah, you have about 3 regulators. You have a Central Bank of Kenya, obviously being the primary regulator.
Yes.
Yeah, you finally have the Competition Authority.
Okay.
Who I think they're still studying the documents, and obviously they want to look at whether such a transaction would.
Was dominant.
I said it's not dominant. It's significant market power.
Significant S&P. Market power.
Yes.
And they have till September. So it looks like really if they've gotten the CMA approval, which at least gets the ball rolling, they could potentially conclude this within September.
I expect a raft of conditions from the Competition Authority. I think one of them could be that they cannot fire employees from both sides, from National Bank of Kenya for a given period of time. Just the same way some conditionalities they give CB and NIC, that they cannot release, they cannot declare redundancies.
So just find a way to work within the current structure with the current resources, and at least just focusing on ensuring that the labor resources are adequately catered to.
But I think that because the CMA has given approval, given a nod for KCB to serve the offer document, I think now that sets a number of balls rolling. One of them is obviously for now the NBK board to actually, they've actually recommended, they've already given
approvals and just so they're receiving 1 KCB share for every 10 shares that NBK holders have. So there's going to be a swap. I think the approval's already there. And we had this conversation last week in terms of materiality. You don't expect a huge impact on either of them. NBK is certainly benefiting, but the dilution for the KCB shareholders is more or less immaterial.
Yeah, but I think the big question is, where's the big picture for NBK? For KCB, acquiring NBK. You're acquiring a bank with 50% gross non-performing assets.
That's true. But it's already done. So we can't go back to discussing.
It's still a puzzle.
It's still a puzzle. It's still a puzzle. But I think for now, maybe what we need to focus is if they can actually complete the entire process within the timelines that they've set for September. Then on other news, there is the payment that went out yesterday for the first Eurobond. Yeah. And that has seen a slight decline for our reserves, about 9%.
So yesterday we paid about
$75 million.
So I think it's about close to $800 million.
Yes.
In principal and final interest.
And final interest payment.
On the 5-year, the 2019 Eurobond payment.
Yes.
Wow.
It was expected, so I don't think it's neither here.
I think the market has already
been factored. It had already been factored.
The market had already factored this huge payments, and obviously they've debited the Central Bank of Kenya's account in JP Morgan in New York. I think when you look at the reserve position this week, you'll see that there's a withdrawal of about $800 million.
It's about There's a 9% drop. I think they paid $80 million for the first tranche.
Yeah.
So a 9% drop. It's neither here nor there because our reserves prior to this payment were $9.15 billion.
Yeah.
And then also recall that we did raise $2.1 billion. So we've seen the CBK working with Treasury and raising funds over and above their needs. So in a way, we've sort of been trading using our FX reserves, raising debt to be able to sustain our FX reserves.
Yeah.
So in the short term, it does look like it's okay, but then the risk always comes about when we have to make extensive payments, and these start off from 2024. So between now and 2024, there's not too much pressure, at least on the Eurobond, but we have to pay back a lot of money to China. But then the pressure now is set to come from 2024. Every 2 years, we have to keep making huge payments. So the question is, between now and then, what are we doing in terms of enhancing our dollar reserves outside of taking out debt?
And even a more pertinent question is, how sustainable is for you to keep funding your reserves via debt sales?
That's very true. And interestingly, when we're speaking about currency, so there was a conversation yesterday that came through from Nigeria. So they are going to keep their current FX regime. So the government there, the Central Bank of Nigeria, has actually been supporting it. And there's an interesting read-through from that, because they're saying if anything happens to that currency, the devaluation that happens, the depreciation that happened from 2016 actually wiped out the capitalization for the banking industry. So for us, in as much as our currency looks stable now, all this cries of this potential depreciation of the currency, it is overvalued. If that actually takes effect, it could easily undermine the capitalization of the banking industry in Kenya.
And Nigeria, you talk about Nigeria. Nigeria is the epitome of how chaotic managing exchange rate channel can be.
Yes.
They have about so many windows for FX windows.
Exactly.
So they have a special window for exporters, they have a special window for people going for Hajj in Saudi Arabia, they have a special window for people paying school fees abroad, they have a special window for people importing healthcare products. They have windows.
Yes.
They have an intermark window.
They do.
But don't talk about Nigeria.
The thing is, the thing to read through from here is the negativity of having the government intervention in the market, because if the market goes ahead of it and is able to counter what the central bank is doing, there could be the potential risk in terms of their industries and especially the banking industry. And you're looking at the valuation on the NSC today. But I certainly think that's a conversation for another day. We will be taking a short break, however, looking at the daily commodity prices, but don't go anywhere. After this break, we're going to be discussing the digital lending platform, what impact it has on Kenyan banks, and whether there's any upside on the NSC valuations. Stay tuned.